Hello everybody and welcome to the midweek market update from Smack the Markets for the 18th of March. So as the world's governments continue to plough hundreds of billions of dollars into the world economies now to try and shore up the financial system and maintain sort of life as we all know it, the markets continue to be even more volatile and continue to exert extreme levels of volatility. So this is unlikely to sort of really change from a market perspective until we start to see some good news flow around the coronavirus and maybe some sort of kind of improvement over the conditions. But news flow, unfortunately, at the moment continues to get worse and worse each day, especially in the European region and US region. So let's take a look at how the markets are faring that we discussed on Monday and some of the opportunities that we're looking at going into the second half of this week. Now, you won't be at all surprised to sort of see that most of the opportunities are on the short side of the markets. The Dow here continued to look in extremely weak, continuing to have good trading opportunities to the short side. Over the past week, the markets have been trading here in between two sort of levels, in between around this sort of like 20 level to, or just underneath that sort of 20 level to around the 21,100 price point. And you can see the market sort of moving between those two structure lines through the course of the week. Even on the big rallies where we've seen huge unprecedented levels of stimulus ploughed into the US markets, the market couldn't get above this 21,100 level, and it remains to be seen really how much more stimulus the governments could put in place to try and change this. So the stimulus that is creating volatility, but it's not changing the direction of the trend. So with that said, really, where does this market look like it's going to go? And as I said, until we start to see some positive news flow coming through on the coronavirus and maybe a turning point on the infection rate, we're not likely to see really any sort of change in the positivity of these trends. So at the moment, the market's really sort of come down to this $20 level, or 20,000 level, I should say. We spoke about this here being almost inevitable to be retested here on Monday. Underneath this level, I think we've got this point here that I've been talking about, which is around sort of 17.5 or 17.7 to 18,000. This sort of level down here represents about a 50% retracement here in the index, and this sort of area down here looks like, you know, if we see continued weakness in these markets and breaking through that support level that the market's been putting in around these this sort of 20,000 level, this looks like the sort of next structure point on the market. So it's not sort of very positive, but this to me looks like the area where we might start to see the end, maybe, to market capitulation and maybe sort of value buying coming back in. So on that note, really, we're looking for weaker prices here on these markets, but again, it's not a market condition that we're looking at any kind of long-term plays. We trade these very much intraday and trading the intraday trend. These moves here that we've seen, where these rallies that we've seen long against the prevailing trend have been extremely powerful, and they're huge moves as well. So from an intraday perspective, traders can trade long and short these markets whichever way the intraday moves are going. As I said, from a longer term perspective, we are looking at sort of weaker prices here until things change. Now, if we take a look at gold, on Monday we said gold, we were looking for, again, weaker prices here. We've seen, if we take a look at this on the 4-hour chart, where we've seen at the moment here is we've seen again tests to the low side around the 1460 level. We've seen rallies back up to the sort of 1560 area. And again, if I zoom out of this, you can sort of see that that sort of 1560 area is quite a key decision point here on gold. It's taken out all of these decision points and trading windows to the short side. It's underneath significant sort of resistance at the moment. Again, I think this market will only turn around once we start to see some change in the infection rate of coronavirus. Now, at the moment, we're starting to see a few positives coming in, and I'll tell you for why. Because we've got at the moment a bit of divergence coming in on the markets. So we've got a bit of evidence here of possibly some buying power. You can see that there's quite a bit of volatility going on here, and we've got these a number of levels here around the lows. So around 1460 to 1480, there's a number of sort of structure points supporting the market from falling further. Having said that, if we come up to the monthly chart, we can see how this looks on a really bigger picture perspective. And you can see that we've got this sort of structure area here on gold, long-term structure area that goes back over 10 years, which is around sort of 1475, 1.475-ish, that sort of area. On a monthly chart, it's always going to be a little bit of a zone. So again, the market's sort of finding key support around this area, not really surprising. But if the market breaks through this area, well, then we could be looking for maybe 1300 here on the gold price. That's the next sort of main structure point that we can see. And that's, again, of course, a significant move to the short side. But from a monthly trend perspective, this possibly is about the sort of last turning point here for a potential higher low to form. So keep an eye on gold prices. Again, these markets are extremely volatile, and trading opportunities are best sort of kept to intraday action. We also discussed Kiwi against the yen as a market. We were looking for short opportunities. Again, across the board, really, it's the yen and the Swisses, which are the main sort of safe havens that the markets are finding at the moment. So mainly a lot of markets against the yens and the Swisses. We're also using our strengths and weakness calculations. So at the moment, looking at things like Aussies and Kiwis weak. They're very sort of weak economies, weak markets against the strong markets, and we can start to see that we've got some significant moves to the short side here. So Kiwi yen, we were looking for Kiwi yen short, looking for possibly 62 to be sort of tested here on this market in the sort of not too distant future, and there's still of our opinion and still our direction that we're looking at trading. So the Aussies and the Kiwis to the short side here, picking up some of these trends that we're seeing in the markets at the moment. Some of these markets, of course, even sort of pushing down to new lows that we haven't seen on the charts for many, many years. But trend structure is looking reasonable. And as long as the strengths and weaknesses are in alignment, we're still looking at opportunities on those. So there's a few markets there that we're keeping a close eye on in the trading room going into the second half of the week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.